Why experts predict mortgage rates will ease over the next year. Hey friends, it's David Hittle, your real estate specialist with United Real Estate Louisville, and there is a consensus among many mortgage and housing economists. Although rates are high right now, they are expected to gradually ease over the next 12 months. So in this video, I'll walk you through the forces that are pushing rates down, what that could mean for buyers and sellers in our local market, and how to position yourself ahead of this shift. But first, what are the experts saying and why? Experts are pointing to several key factors that could drive mortgage rates lower. The first is moderating inflation. If inflation cools, the pressure on interest rates softens, giving lenders more room to reduce rates. The second is an economic slowdown or growth moderation. Lower demand for credit and reduced economic growth can lead to lower yields on bonds, which mortgage rates often follow. Number three is Federal Reserve policy expectations. As the markets price in future Fed rate cuts or a more dovish stance, long-term interest rates may drift downward. Number four, global investment flows. In times of global uncertainty, capital often flows into U.S. Treasury bonds, pushing yields down, which then influence the mortgage rates. While nobody knows exactly how far or how fast rates will ease, the consensus is that over the next year, we may see a gradual drift downward. Not dramatic plunges, but steady relief. But of course, this forecast depends on several moving parts. We could see inflation surprises. If inflation surprises on the upside, rates could stay elevated or even rise. With economic data, strong employment, consumer spending, or rising wages might push rates higher instead. Fed communication and actions. If the Fed remains hawkish or signals future hikes, that could put upward pressure on the rates. Global shocks or market sentiment, geopolitical events, or capital shifts can disrupt the trajectory as well. So while easing is widely accepted, it's not guaranteed. Keeping an eye on inflation, Fed signals, and bond markets is essential. But what does all this mean for us locally here in Louisville, Jefferson County? If rates drift lower, buyer affordability improves. Some buyers who were previously priced out may re-enter the market. Sellers may see more competition as markets become more active. Homes that are priced aggressively or dated could struggle. In neighborhoods with high inventory already, even small rate drops may not move homes unless pricing and conditions are sharp. As interest relief spreads, you may see more refinancing activity, which can cause ripple effects in buyer mobility and inventory in your area. I, of course, will be watching Louisville's lender offers, rate locks, and local mortgage activity to see how this theory translates to our market. So what should you do right now knowing this outlook? Buyers, if you see a decent rate offer, it might make sense to act now, especially if rates may slide further. Waiting could cost you in price appreciation. Sellers, price your home correctly because rising buyer activity from easing rates means more competition. Homes that lag on condition or price may not fare very well. For refinancers, if your current rate is high, start shopping. If rates ease, you may be able to refinance into better terms and benefit monthly. Always stay ready. Have your financials in order, Be pre-approved so that you can move when rate windows open. Watch for signs in the bond market and Fed commentary. So here's what I want you to walk away with. The rate relief may not be drastic or immediate, but many experts believe it's coming. And that gradual easing has the opportunity to open more opportunities for buyers, motivate sellers, and reshape local market dynamics. If you'd like, I can pull up what mortgage rates are doing right now in Louisville or Jefferson County, run some projections for where they might head, and help you decide whether to lock in or wait a bit for better options. I am David Hittle, your real estate specialist with United Real Estate Louisville. Let's watch the trends together and make sure you are ahead and not behind when the rate shift happens.